South Africa's big four banks, that's Standard Bank, FirstRand, Barclays Africa Group and Nedbank, reported record profits in the first half of 2015. This is despite the dire state of the economy. EY, in their latest review of the local banking market, found banks' headline earnings hit their highest level since the global financial crisis, with profits growing at 11 times faster than GDP. Well, in studio with us to discuss the performance of these four major banks is Emilio Pera, EY's financial services sector leader for Africa, and Phakamisa Ndzalema, financial services editor at the Business Day. Emilio, let's start with you. A dire economic environment that we've got, yet the banks still are giving exceptional performance. How is this possible?
If you look at the performance of the banks since the global financial crisis, where they weren't really directly impacted, we have seen a steady growth. Through that period, there has been some shocks as far as bad debt write-downs, etc. And I think they've been quite conservative as far as their credit extension is concerned. And if you consider the big four banks, they're also quite well diversified between corporate and retail banking and also other products. Also looking at operations outside of South Africa, and through that managed to not be that susceptible to the challenges that we see economically currently.
Phakamisa, Emilio is talking about diversification being key. In your opinion, when it comes to growth prospects for this particular sector, where would you say you would be seeing it?
I think our banks are resilient. We will see more growth in the banking sector, but I think going forward it's going to be tougher. The macros are not looking good. Of course, they've defied the macroeconomic environment and they've grown more than 11 times. I mean, our GDP has contracted in the second quarter, but when you saw FirstRand up 14%, headline earnings, Standard Bank up over 20%, of course coming from a low base, Nedbank I think 11%, Barclays double digits too. So you're seeing a double-digit growth across the board. I think it's going to be difficult to repeat those numbers going forward unless something happens outside Africa. I mean, part of that growth is new income streams from the rest of Africa. If you look at Standard Bank, they're turning around their profits or businesses in the rest of Africa. I think profit generation outside SA is about 27% at Standard Bank. You're seeing Barclays, I think about 20% if I'm right. FirstRand and Nedbank are still single digits there. But those are new income streams. And if they're doing well outside South Africa where there's higher economic growth, then you're likely to see that offset the subdued macroeconomic conditions. But the guys, I must say, continue to perform. They're careful on how they lend and who they lend to, as Emilio has said. If you look at the impairments, bad debts in simple terms, they're not going mad. I mean, some of the big four banks are experiencing a decline in bad debts. Standard Bank, there's an uptick there of about 2%, but everything looks under control. And of course, I think there's good management. So if good management remains, I think you'll continue to see growth, but a bit slower than the previous year reporting period.
Emilio, let me pick up on Phakamisa's view or statement on non-performing loans before we look outside South Africa's borders. The consumer, South African consumer, is said to be under a lot of pressure. We are in an interest rate hiking cycle. To what extent can we expect this to put additional pressure on the profit or the bottom line?
We've seen in all the results announcements, the CEOs of the banks said that it is a very tough economic environment, and especially in the retail banking space, and with the consumer remaining heavily indebted. You have to also consider the profile of the loan portfolios. And also, if you consider 2-3 years ago, there was a significant pullback amongst the big four banks in unsecured lending. So a lot of the growth that we're seeing is in home loans and the vehicle finance space, although credit card has also seen quite significant growth. So the expectation is that although we haven't seen that impairment levels tick up, and because banks have been quite conservative in their lending practices over the last couple of years, that is probably the reason why. But with the economic growth that's not showing any improvement, we would expect impairment levels to start ticking up at some point.
Phakamisa, you spoke about the rest of the African continent and the African growth story. Of course, we are seeing some of the banks very aggressive in terms of their investment and the expansion there. But a lot of these countries are also commodity facing. To what extent is this likely to have an impact on their future growth?
Yeah, so West Africa, Nigeria, that's where everybody wants to be, and Ghana. You saw Standard Bank's operations there, call it Stanbic IBTC. Took a massive knock on the profits, reflecting the macroeconomic fundamentals on that side, which is commodities driven. So I think it's going to be tough, but there are selective ways of doing things. They don't only lend, they do advisory. There are a lot of deals that are happening on the continent. So there will be off-balance sheet activity. They're targeting commercial banking, or call it business banking, outside corporate banking. There's opportunity to sign on more small businesses, which then boost the, what do you call it, non-interest revenue segment. So the more deposits they collect and the more transactional activity they get. I think they're also going to be cautious on lending because they know that the commodities cycle is really bad. I mean, FirstRand did say last week that they're increasing their provisions. They didn't give us a number, but to adjust for that environment, I don't think they'll be caught off guard. We would have seen it in the interim numbers if things were really, really bad. I think they're more cautious, and I think they'll continue making money, but it's tough, yeah.
Emilio, do you think there is further scope for growth in the rest of the African continent, not taking South Africa into consideration? And of course, looking at the specific banks in those jurisdictions, and they're also fighting for their share of market share.
Yeah, in looking at, as Phakamisa just mentioned, in looking at the banks, the results have still been quite positive. The concern is in, as mentioned at the year end, with oil prices that has come down quite significantly in oil-producing countries in particular. More recently, commodities in general. But if you look at the overall economic growth across Africa, still quite strong growth. So especially the banks that also have a retail footprint in the various countries, and banks like Standard Bank and Barclays that have quite large footprints across a diverse country spectrum, and then Nedbank through their EcoBank offering, and then at the same time the diversification between retail and corporate bank. But to the point, we also see significant competition from regional players, especially East Africa and West Africa, that's also quite aggressively looking for market share. And that is where the innovation that we're seeing locally in our South African banking environment will support them as they grow their footprint and critical mass in the countries in which they operate.
Competitive times, Phakamisa, so how important is technology going to be?
Yeah, I mean, it makes banks agile. If you look at what Standard Bank is doing, I think they've already spent 15 billion rands changing their core banking system, and they're still investing more. I think it will probably go up to 30 billion. It makes banks much more agile, and you know, I'm not a technology person. For me, a bank has got to give you credit in the cheapest rate possible and the cheapest fees possible. And then the technology should follow. But people are mad about technology. People want to bank on their cell phones. People want to be able to look at their bank balances on their wrists. So you are seeing innovation, and you've got no choice. If you don't do it, other people will do it, and those that have it will get more customers, and those that don't will be left in dinosaur age, I guess.
There you have it. Innovate or get left behind. And of course, this is definitely something that the big four banks here in South Africa are taking into account as they continue with their African expansion story.